Hello guys, this is FairBinaryOptions.com. It is Monday, and after the aggressive selling of the Euro-US dollar on the or into the Asian session, I would like to actually buy call options on the pair, and let's say having a bigger expiration date, talking about end of week expiration date here. Why call options, you might say, when the move is clearly bearish, or price action is extremely bearish on the Euro-US dollar? Well, there is something that, or let's say a classical falling wedge that the market is forming, and the falling wedge from my point of view starts from this moment of time, and moving into the downside here, it has 5 waves structured. This would be the first wave here, wave 1, then the second wave around here, one and the 2, and the third wave all the way to the downside here, 1 to 3, then the fifth wave here, the fourth wave, sorry, 1, 2, 3, 4, and the fifth wave here, 5, 1, 2, 3, 4, 5. And this would be the falling wedge. Like any falling wedge, it is traveling, price is traveling within the 1 and 3 and 2 to 4 trend line. This would be the 1 and 3 trend line. This would be the 2 to 4 trend line. And now, surprise, surprise, the 2 to 4 trend line is broken. And not only that it is broken, but actually market tried here or retested it and formed a so-called a triangle, or a continuation triangle on the move to the upside. And now the path of least resistance would be for a stronger move now to retrace probably the whole wedge here, and the market to go something like 127. It is a bit crazy, it is 125 now, but trading normally goes with ups and downs. I would say that this is nothing but a leg of a contracting triangle of a bigger degree. So this would to be wave A, this to be the B wave, this to be the C wave. So A, B, C. Now for the C wave, out of this degree in red, we had, of course, the falling wedge. And the whole move from here to be nothing but a leg of a contracting triangle, this one here. I would say that is either a B wave or a C wave, it doesn't matter, because a win-win situation calls for market to go something like 61.8 out of this whole move. Now 61.8, if you take the Fibonacci from here to here, goes and calls for 126.80. Now the market is trading 125.04. So what to do then? Going long if you are trading the regular spot market, or buying call options with end of week expiration date. Why with end of week expiration date? We want to avoid a positioning or more consolidation on a classical Monday. Remember, the main events of the day, or the main economic releases of the week, are going to come on Thursday with the ECB, the European Central Bank, and on Friday with the NFP, the non-farm payroll. So let's write here that I'm buying call options with end of week expiration date based on both technical, if you want, and fundamentals. The technical part would be a falling wedge, and everybody knows that a falling wedge is rising, of course, so we want to buy call options. And from a fundamental point of view, the ECB on Thursday, I would say that they are not going to announce anything new or whatever the easing, as simply easing in Europe is not that easy to implement, because one cannot buy government bonds, because there is not only one government in Europe, but plenty of them. Have a great day. Thank you very much for being here. FairBinaryOptions.com. Make sure you check our website, make sure you check our Binary Options Academy, and keep in touch. Call options on the Euro-US dollar. Bye bye.